Hey guys, my name's Ravi Sharma and I'm the founder and buyer's agent here at Search Property. Thank you for joining me on yet another episode of Search Property TV. If you're new here, we talk about personal finance, Australian real estate, and how you can get ahead by getting into real estate. So if you haven't already, subscribe down below and smash the like button if you enjoy this video. This is the Property Wrap show, and this is where we go through articles that may or may not sometimes have a clickbait article headline. And I'm here to use my expertise and experience to really divide what is fact from fiction. And this one's especially important for everyone looking at Sydney as a potential investment choice, or if you live in Sydney, then you don't want to miss out on this video. As the title suggests, this is top 10 danger zones for oversupply of apartments in Sydney. Let's dive in. Okay, so top 10 danger zones for apartment oversupply in Australia, conducted by RiskWise. Now, given that the photo is of Rouse Hill, this is in the northwestern corridor of Sydney, for those who are outside of Sydney. So this was published 13th of September, so yesterday, and we kick in. So Rouse Hill in Sydney's Hill District is expected to see its amount of units grow by over 200% in the next 24 months. It stands out in RiskWise top 10 danger zone areas in Australia for high settlement and cash flow risk. Rouse Hill is set to see a further 1,661 new apartments in the next 2 years. What's important here, guys, is Rouse Hill and Schofields and the Ponds have never traditionally been for apartments. They've always been new land releases, so new house and land packages that get sold there. And a lot of immigrant families move out into that area. It's a really nice area if you haven't checked it out, but it is about an hour or so away from the city, CBD, right, in Sydney. And you're probably about 35 to 40 minutes away from Parramatta CBD. Rents have been one of the biggest issues during COVID-19, with inner city apartments in particular seeing significant declines. So we already know rents are dropping due to COVID. Unit rents have been hit the most, with falls over the last 3 months in both Sydney and Melbourne reaching 2%. Wow. Buyer's agent Rich Harvey said having new apartments in outer suburban areas like Rouse Hill made no sense. Okay, well, I mean, I'm not going as far as saying no sense. I'm just saying that it's traditionally been known for house and land packages, but there is a case there for apartments to still work in Rouse Hill. He says, while it may be nice to have a shiny new kitchen and bathroom, there is a significant downside price risk as the supply of land for further development is plentiful, Mr. Harvey said. Investors and home buyers are far better seeking of apartments in locations where land supply is very low and demand for property is high. So this is a very important point to recognize. What he's referring to is land supply. The same way we look at demand and supply for specific properties, so in this case we're looking at apartments, what we need to identify in an area is that if they build apartments here, or they build, a new house here, where's the next land available? How far is it till the next land release? And that will allow you to understand how many more units are coming in the supply pipeline. Let's say, for instance, you were investing in a particular development in Rouse Hill. If you had the DA approved for, say, 2 other blocks in that sort of area, there's another set of units, apartments coming up. So it really goes, well, if there's so much supply, where's the demand? And that's where you need to understand supply pipelines instead of just going, hey, I've got an apartment and it's in Sydney, it's going to grow. Mr. Harvey said there is settlement risk for the buyer in the market where prices are declining if they discover the value paid for the unit has declined significantly. Settlement risk is basically referred to when you're buying off the plan. What you essentially do is saying, you know what, I only have to put a 5 or 10% deposit down for a unit, or you then wait for settlement period, being that it's going to have to get built, and then you're going to settle. So you're essentially going, yes, I can only put 5% down, and I don't need to take a mortgage, and if the price goes up in that time, I've actually benefited from just putting 5% deposit down. That's how pretty much off the plan unit salesmen will sell it to you. However, when we're actually looking at real facts and figures, you're basically saying that when you're buying off the plan, that in 24 months, when it comes time to settle, your financial position is going to be the exact same as now, or has improved by the time you settle. What I mean by that is there's job certainty that you're going to be earning the same amount, if not more, in 2 years' time when it comes time to settle. And two, you don't have an emergency of some sort which requires you to have a large cash outlay. What this means is settlement risk. Because there is a time there where you're relying on today's numbers for a settlement in the future, if you aren't in a similar position to get finance, or the banks change their criteria and you can no longer get a loan, you're at settlement risk because now you can't settle. In that situation, what happens is you lose your 10% or 5% deposit. People won't tell you this, but understanding, having worked personally in conveyancing for about 2.5 years, I see a lot of this and have seen a lot of this. So it is something that I like to avoid, especially buying off the plan. Anything new, I've mentioned this in previous videos, just because of developer incentives. Settlement risk is on top of that. Let's keep going. So here we've got, this table lists the riskiest areas in the country in terms of oversupply, based on not only the supply itself, but also on low demand for rental apartments. Okay, so this is pretty much looking at from a rental perspective, but this will also flow into your price action. So as I've mentioned in previous videos, you can check them out here, but what I've mentioned is supply coming into the market, if it's not met by equal or greater demand, why will the prices increase? It just makes no sense, because if there's more supply, there's more options for buyers, why will they now pay higher to get a property that they have choice with? So this is two phases that we need to look at. One, price action, so capital growth, which everyone seems to be fixated about, and cash flow. If there's so many apartments there, every tenant is going to have choice to go, well, if I don't want to move into here because you're charging $400, I can move into there because they're charging $390. All the negotiating power is with the tenant. As a landlord, you're going to find yourself in strife when you've got no tenant in there at all. So forget about negative gearing and positive gearing. You're going to have no gearing because you don't have a tenant in there. Sydney's Gosford will see its apartments grow 72%, with 1,859 new apartments set for completion over the next 2 years. So this shouldn't be a surprise. Gosford's always been oversupplied with apartments. I'm not sure what they're doing out there. Developers just got crazy and investors took the bait. They were basically jumping in with these rental guarantees and leaseback options. They got screwed over. Melbourne has the highest number of new apartments, some 4,744 to be finished, which will see the number of apartments grow over 13%. So obviously that's in line with, it doesn't sound like a lot when you're doing it in proportion to what's already available. RiskWise Chief Executive Doran Peleg said property investors should be extra cautious of high degree of risk associated with off-the-plan units. That has further increased due to COVID-19. So again, high risk with off-the-plan units. Now put COVID on top of that. It essentially means that I know for a fact valuers are coming in and they're valuing these apartments less than what you bought them for. So at the moment, if you bought a year and a half or 2 years ago, if you're settling now, your apartments have gone down in value. So if you put down a 5% deposit 2 years ago on an apartment that was supposed to be built somewhere in Sydney or Melbourne, your property price that you bought it for off the plan with their fancy brochures was probably at $515,000. You come to settlement now and it's actually worth $495,000. So you've lost $20,000 by holding the property for 2 years, but now the bank's only willing to give you 90% of 495, not 515 that you initially thought. So if you don't have the extra cash to make up the difference to get the loan to that amount, you're going to lose your deposit. The equity risk, being the risk for price reduction that already had been high prior to COVID-19, has further increased as investor activity is lower and their awareness of the risk associated with rental apartments has increased. COVID has also increased materially the cash flow risk as vacancy rates, as per SQM, are at all-time high, peaking in May at 16.2%. In June, they have dropped slightly to 13.8%. Guys, I've been talking about this for a while now. Vacancy rates is so important. When I talk to people when they're saying they're buying in an area of Sydney and they're buying a unit because then they can take advantage of, the grants and then the first home buyer grants, and then they're going to turn it into an investment. It's fine, it's an investment, it's going to grow. It might grow, might not grow, but what I can guarantee you is if the vacancy rate for apartments in the area are like 30%, in this case we're talking about 13%, pretty much have a position where for the next 2 years you're gonna have no rental growth, right? And if you see anything, you're gonna see prices come down in terms of apartments because there's too much supply. And two, you're also gonna see your cash flow deteriorate because tenants have choice. Vacancy rates is so important. To give you an idea, where I'm investing with my clients, we're looking at areas where they have a rental vacancy of less than 1%. 1% is a rental crisis. That's where you're basically going, every 6 months I could put up the rent and we've got rental growth. There's a lack of supply, huge amounts of growth, and demand is outstripping supply. That's what you need to be in, not these rubbish areas where you got 13, 15% of vacancy rates. Damn! Mr. Peleg said that the high profile issues around cladding and defects has increased enormous reputational damage across the entire industry, and because of this, investors have lost interest in high-rise unit developments and were turning to safer house and land packages suitable for families. Well, look, I mean, I'm not a big fan of house and land packages anyway, but if I was to spend an extra 100K and got into a house and land package in that area versus an apartment, I'm taking that deal every day of the week. There's less vacancy rates with the housing in the area, and you've got less supply coming onto the market. Peter Wargent, co-founder of Allen Wargent Property Buyers, sorry mate, said that units, particularly off-the-plan purchases, still carried a high level of risk of significant price reductions, 100%. He noted that uncertainty in the been heightened in 2020 and that buying into oversupplied areas at a time when the international borders are effectively shut, this would only serve to compound risks. Again, guys, people that were buying off-the-plan units or high-rise development units, there were a lot of foreign buyers. We don't have any of that at the moment. Lack of foreign buyer investment interest is really putting some pressure on these developers. He said that rental markets have been weak for inner city apartments due to the absence of international students and tourists, and that where possible buyers should look towards more supply-constrained markets and assets within a genuine scarcity value. Over the medium to long term, it's the land value component of the land that does the heavy lifting for you, and therefore, buyers should look for a high land to asset ratio. The unit oversupply issue has been with us for some years now, and outperformance has mainly been in family appropriated dwelling types in markets where demand is consistent and supply is restricted. Well, look, I don't really agree with it just being with house and land because they've got the land component to it. I've looked at this in a previous video, check it out. It comes down to basic economics, supply and demand. If you have a huge amount of supply coming on with all this land being cut up behind your property, well, having a house and land would serve no purpose, right? Because they could just build 2 streets down that way. But what he's trying to say is that supply and demand is essentially what you need to be looking for. So I also just want to go quickly through this table because it lists a few suburbs that we really need to pay attention to. So we've got Rouse Hill here at 200.4% new units next 24 months as percentage of units. So there is a huge oversupply coming into that market. We also see Parramatta at 13.2%, Gosford at 72.9%, and Surfers Paradise here, everyone's been buying up in Gold Coast, but we've known there's a oversupply issue there. We will also bring to attention Adelaide. So this is not to get confused with what I've been saying. I'm not looking at apartments in the inner city ring of Adelaide. That's not what I'm looking at investing. There are some really good fundamentals in Adelaide or South Australia as a whole, but I'm not concentrating on that. And Victoria, Melbourne, well, we've already addressed that they've always had an oversupply of units. I'm sort of surprised that we're not seeing more inner city suburbs of Queensland in and around Brisbane. Obviously, we've got West End here, but nothing more than that. So guys, what do you think? What are your thoughts on the oversupply, the 10 danger zones, and what's your thoughts on units as an investment? But if there's something specifically you want to have a chat about, why don't you put it down in the comments below, see what your thoughts are, and let's grow this community. Let's start having those conversations and put it in the comments rather than just emailing me, because there are other people like yourself that want those answers. Thank you guys again for joining me on yet another episode of Search Property TV. I hope you've enjoyed it, taken some value out of it, and share it with your friends and family that need to hear this. I'll catch you guys in the next video.